Good morning, ladies and gents. Welcome to another video brought to you by Total Control Traders. How's everyone doing this morning? Just gonna quickly make sure that the volume. Volume is working. I think we're good to go. All right, let's get right into it. I'm gonna start with the market. Same as usual. Let's take a look at SPX. All right, this is the potential bear that we had talked about for the last 2 weeks. Ever since, I want to say it's the 7th or the 8th that we had started talking about it, looking at a daily bearish divergence on that new high, and we have gotten that daily bear divergence with extended target from this low to the high to the higher low. What a strong bull move. And then from here, price action upwards, RSI or oscillator, whichever one you use, should be looking downwards. That is the daily bearish divergence that we were talking about. And then let's take a look at the 8 hours. So 8 hours, day before Monday? Nope. Thursday, we slightly lost that 8 hour 8, but it was immediately bought up with a huge upper wick. That is a little bit of a warning sign. But ultimately, we got bought up, and then coming into Tuesday. What is the 21st? Yeah, 22nd is Monday. Okay, coming into Monday, big buy up straight into that extension target. Huge wick, big sell off. Good morning, miner. And from here, we saw a confirmed loss of 8 hour 8 with follow through on that next candle. And overnight last night, bullish action is showing up right now. Anyway, so overnight last night, we saw a back test of that 8 hour 8. Ultimately, yesterday was very important in the sense that the bulls saved the trend line. Okay, this long-term trend line, when we look at this, there's been multiple supports from back here. A back test here, another rejection here, and support over here again. And yesterday, the bulls were able to save that 8 hour candle towards the end of day, closing above that trend line. So right now, we're sort of in a wedge in between that trend line as well as the 8 hour 8. Today, my personal anticipation is I want to watch for that loss of 8 hour 8. But if things don't go as planned, these two price points are the key to break for today. Yesterday's low and high. Yesterday's low at 4653.2 and the high of 4700. Those are the two key points for bulls and bears to break. If the bulls were to break over 4700, we'll be looking to exit the bear plays. If the bears were to break under 4653, we will be looking down at 4631. That is a must hold for the bulls. Missed me Friday. I missed you Friday. Hey, so yeah, these two are the key points for the bulls and the bears break. Ultimately, what we're looking at is same as before. 30 minutes is in that bearish trend right now. We can see lower high, lower low. We are in a somewhat of a wedge right now. So depending on how you want to draw this, there's multiple ways you can do this. Probably around there. Shorter time frame. Once this wedge breaks, we should see direction on follow through on the break of either 47 or 4653. Hourly is also in a bearish trend. 4 hours, we're gonna need to lose that 4653 to confirm a 4 hour low. Ultimately, right now, 4 hours, we already saw a higher high straight into a lower low. That is generally the beginning of a trend change, and we have now set the lower high. Let's see if we get that next lower low to confirm the 4-hour trend change. All right, so that's SPX. Let's take a look at NAS. NAS, very similar idea, but ultimately is a lot weaker. Okay, NAS had ran the most on the way up, and if you look at the previous all-time high, it had ran 6.7% from that previous all-time high versus SPX had ran 4.2%. So between the indexes, NAS had ran the most, but ultimately it's the same thing. There is a trend line from back here. It's not as strong, not as a long-term trend line as the SPX one. There's not as many supports. We've seen 1, 2, 3 supports, 1 rejection from back here, a little bit of chop around, a little bit of resistance here. And yesterday, can't remember if it was yesterday or the day before, let's see, 22nd, the day before, we lost that trend line. Okay, very key here. You can see resistance still, so this trend line is still very much intact, and we lost that trend line with an immediate back test. Now we are seeing a guide of that 8-hour 8 sell-off. And so one thing very key that I'm noticing in the market that's behavior wise is very different as opposed to the before by the fucking dip. Now, no, yeah, the action is not the same. Every single pop is getting sold off into, and one other thing I've noticed is the sell-off seems a lot more controlled this time, meaning that we could see a lot of downside, in the sense that if you look at the 4-hour chart, if you look at the hourly chart, doesn't matter. You know, you look at the hourly, it's a little bit of a chop, especially yesterday. Hope you guys all stay safe, not get chopped up yesterday. Today would anticipate something a little bit more similar as well. So if we look at the 4 hours, you can see that they're not letting the chart getting too far extended. Okay, we got extended here, a little bit of pop waiting for that 4-hour 8, and then we rejected straight from that 4-hour 8 and came back because we rejected too much, too fast, too soon, and we came back test that 4-hour 8 again before another rejection. So this is a very notable, whoa, what bearish action, holy. There's a very notable action here that 4-hour 8 is getting constantly rejected but not getting too far extended. You look at the 30-minute, we're not even near oversold. Already we're not oversold. We were a little bit oversold on that candle yesterday, but ultimately did not reach the oversold territory. 4 hours is getting there, 38, so it's not too far. 8 hours, still lots of room to move. Daily, whew, the RSI is only at 57. There's a whole ton of room to move. Now let's take a quick look at the 15 minutes. Actually, let's look at the 5 minutes. So as the video started, I mentioned bullish action were coming in, and this is exactly what I'm talking about. Bullish action immediately getting sold off into. Very key behavior change in the indexes. And on the shorter time frame, I really don't like drawing on the 5-minute time frame because ultimately it's not that useful when you, to me personally, when I'm looking at charts throughout the day. But there is a upper trend line here, and you can see why we rejected from where we rejected from, and there is a lower trend line here somewhere. Let's use this one. Yeah, see, so it is a descending broadening wedge, which can get fairly scary. Just keep that in mind. The other thing is, you know, for those of you that remember, I hope you guys remember, this is a cheat code I'm going to share with you guys again. Okay, cheat code coming up right here. So this, you can see this channel. This is an indicator called linear regression, and it takes a lot of getting used to understand how it works, but ultimately it's a cheat code that I've grown to love, in the sense that the after you get used to how it works, it'll give you a sense of trend changes on regardless of the time frame that you're looking at. So right now we're looking at the 5 minutes. If you were looking at the 5 minutes, you know, from back here, this linear regression would have been going upwards. Let's just draw it out for you guys. You know, you would have been looking at a linear regression of something like that instead. So ultimately this indicator, it changes as the price action changes, but the upper trend line and the lower trend line is very key. Generally you will see a bounce or a rejection around there. A lot of times if you're seeing, one thing very key to know on this indicator is a lot of times you're seeing something like this. Well, actually, let's right now it's going downwards. If you're seeing, popping up above with another few more candles staying above before coming back down, and then it goes up again, that means the momentum is strong and they're really trying to change this linear regression into the other direction. There's two ways this can happen. If it were to happen like that, the candle up here, they would either broaden this linear regression, or you would have to see price action from before not as high as this and more so lower over here, so that it's ready to reverse. So it does take time to reverse, and I really like how it works. Anyways, so just figure out to share with you guys. Also, another couple of things. TradingView Black Friday sale is on right now, I believe. So this is not a sponsored video, not sponsored in any way by TradingView. Just saying this is to my knowledge, one and only, or one of the best sales by TradingView. 50 to 60% off. Let's just pull it up for you guys here. Yeah, where'd it go? Oh, there it is. So if you go tradingview.com, it used to have a pop-up. I don't know what happened. Anyway, so you just pull up on the top right here. Oh, you guys can't see. Right here, right here, somewhere top right. Okay, you will see a Black Friday sale up to 60% off. You click that, and it will lead you to that 60% off site with an actual sale, 40%, 50%, or 60%. Now that's not even the best part. The best part is you're not paying for 12 months. You're paying for 13 months. So there is basically buy 12 get one at half price, if not more or less, somewhere around there. Okay, you get the idea. One other thing I noticed is you can buy multiples. So, right now I have like 700 days left on my subscription. If I were to, it does allow me to buy another one to add another 16 months. Oh, you can see it right here, 644 days. It does allow me to buy another one, and you'll see it'll just add another 13 months onto your subscription. Okay, just to let you know, that is one thing. The other thing is Black Friday sale for Total Control Traders trading chat group is on right now. If you're to use the promo code BF2021, you will receive 20% side wide. And welcome to our newest annual member, Darren. Thank you for joining us. Thank you for your trust. All right, so let's get back to the market. There we go. Okay, so NAS, as mentioned, immediate back test. We are seeing a rejection. That 4-hour 8 shorter term wise is the must breakthrough for the bulls, but ultimately I am still seeing consistent bearish pressure. And let's take a look at Russ. So Russ back test the previous all-time high, coming back to back test this previous wedge upper trend line. This is a must hold. To me, this is a must hold now. Ultimately, what I was looking at before was yesterday's candle had to be held. It's okay that we're opening lower today, but today we're gonna need to see that big lower wick bulls coming in, because there is this lower trend line that I wanted to look to see the bulls being able to hold, as well as the GP, as well as the previous wedge upper trend line and the key zone. So 4 confluence areas. I want to see a hold of this area, but ultimately the market overall is bearish, so I can't see this going lower. Just be cautious if you're in any bull plays. So as mentioned, if we were to bull break on SPX, bear break on SPX, I would consider my only bull position left exiting it, which is TNA. All right, so that's it for Russ. Oh, one thing very interesting yesterday is Dow was green in the overall market. It held that key previous all-time high resistance support area. Yesterday it was green, so today seems like it's moving with the market so far. Nothing too notable. One thing do need to note is US dollars. There's this very key trend line from a long time ago. Okay, maybe we should mark this as money line. Whatever. Multiple supports again, and then we saw a loss of this with immediate, probably can redraw this, immediate back test, and then became resistance again, and we are right at that trend line again on US dollar. Ultimately, the trend is very bullish on US dollars. I might delete this one. And one thing also, this money line from back here, you see support over here. Ultimately, that's where we're bouncing from. So what this leads me to think is further bearish market, but with all the indicators not being in line, it is a little bit concerning. If we're looking at the US 10-year yield, it is chopping around that trend line, not giving it much respect. We are over that trend line right now, so that is bullish. So ultimately, over the longer term, a little bit further down the road, I would anticipate Christmas maybe is gonna be bullish. That from a standpoint of bearish place is a little bit concerning, because that does not give too much time to the bears. This is a inverse. No, it is not. The trend is already changed to the bullish, but ultimately this is a little bit concerning for the bear place. Now the good thing is VIX. Look at this amazing chart. Okay, remember we talked about this in our last video. Very rare occasion of daily bull divergence on the VIX. Last time I'm able to see this is 13 months before right now, which would bring us to October 2020. Let's just check that. October, where's October? October right here. Oh, it's August. Okay, so maybe a little bit more than 13 months. August, this is the last one I was able to find. And then before that was July 2019. Yeah. So very rare daily bullish divergence on the VIX. And now we are seeing a follow through, a rejection from that upper trend line of the bigger wedge, the shorter term bigger wedge. And from here we saw a higher low into higher high, breaking above the trend line, and now we're seeing a back test of the trend line, continuation potential. Watch out. VIX is a warning sign, and if this were to go, the market would, I guess the other way around, if the market were to go down, this should see a decent spike. Okay, a couple ways you can play this through: VXX, UVXY. What's the other one? I can't remember anymore. Anyways, the other concern I have for the bear plays is gold. If we look at the gold, there's been this long-term upper trend line, and we are rejecting from it again. We are seeing very decent bearish action on gold after that rejection. Ultimately, if you're playing bearish, you want to see gold go up. So on this move, it's leading me to think a little bit more, leaning towards non-strong bearish pressure on the market because of this. Originally, when we were talking about the SPX daily bear divergence, from when we were talking about it from back here, I was anticipating this to be a strong bearish price action upon the confirmation of the daily bearish divergence. But with this, is leading me to lean a little bit more towards just more so a consolidation on the market before a next leg up. So which is very interesting, you know, it lines up with the US 10-year as well, which also lines up with the general Christmas rally into new highs before consolidation and beginning of the years. So the only thing I can say is play with the trend until it ends, and the trend right now, shorter term wise, is bearish, with 4 hours looking to convert into bearish. So play with that trend. Morning, Darren. Right, so let's get into the hottest tickers. That's the market. Actually, let's take a quick look at Bitcoin before we do that. There is a slight, so there's a very strong daily bearish divergence on Bitcoin, and we are seeing follow through, making daily lower low. But ultimately yesterday, potential for a somewhat weak daily bullish divergence, but we needed that follow through today, and we're not seeing that follow through today. Bitcoin, meh. As long as we don't get over that 88, that I would think there's further downward price action to come. Right now we are looking at the GP alongside this key trend line. We chopped around a little bit, but you can see resistance back here, support again before breaking down, back test, chopped around, support again. So this I would anticipate this trend line to still be active. Actually, there might be another trend line down here. Hey, would you look at that confluence? Well, we got past it already. So over the next few days, we could see strong bearish pressure on Bitcoin coming into this confluence area. All right, let's get into the requested tickers. First one is going to be coin. So there is a short-term lower trend line that was serving as support before, and then as we bull broke over it, it came back to back test as well. So I would anticipate this trend line to still have some sort of reaction on this bear break, potential back test before another leg down. Right now, this is ultimately, I'm still looking at the head and shoulders pattern with this neckline having been broken. It is a strong chart. So the bounce got over the GP. Yeah, it actually had one close over the GP. So it is a strong chart. But this head and shoulders is a little bit concerning. We did break under the neckline. We're going to have to see whether if we get follow through. We are bouncing from the key zone. Why is the chart so messy? What is this orange line? Oh, pre-market. Yeah, this is right. Okay, so we're holding the 0.382 right now, so the chart is still strong. Today you're gonna need to see that follow through. Yeah, there might be a play in here. Today, you're going to need to see that follow through bullish action into that touch of daily 8 at least. But with this chart right now, as long as it doesn't close over the daily 8, I would not be looking to play bullish on it because there is head and shoulders pattern. We are trading under the daily 8, and you can see bearish volume outweighing bullish volume. There is a bounce play in here for sure. But it's not too far extended. So even with the bounce, I'd just be looking at the daily 8. Next is DKNG. Ooh, money lying. Must hold area. Yeah, this is the must hold right now. So money lying from way back here. I mean, depending on how you draw, you could have drawn way back here, but you know, actually, let's see how that works. Did it reject on the right shoulder? So the bigger picture, there is a huge head and shoulders pattern. It did not reject from that shoulders. Okay, so there's a huge head and shoulders pattern with this being the neckline, this white line over here, white trend line. We did break under that head and shoulders neckline, meaning we should see follow through, which we are seeing follow through. Huge selling pressure ever since the break of the neckline. It's already been a 24% loss. Whew. We are at the money line right now. We are at the key zone. 1-to-1 extension target from the high to the low to the higher low, lower high. Sorry. We are looking at 34.26. So would anticipate a bounce from there. We are opening up lower. We're not too far extended on the daily though. Weekly is getting extended. Whew, there's gonna be a bounce play for sure. Yeah, pretty far extended. Watch for reaction around 34.26. Today. Again, it's going to need to bounce. Most ideal would be today. You know, lower open, a little bit of a sell-off, touch that 34.26 before a reversal potential. So that could actually be a top watch today. Let's see what I'm going to replace. Don't like that anymore. Okay, yeah. Let's I'm going to put that onto one of the top charts for today, whether it's going to be scalping or, you know, a little bit of a swing trade. And we're going to need to see what the reversal looks like. Let's see if there's a shorter time frame bullish divergence. No, not on the 30. Ooh. I don't like this. Okay, so there's a bullish divergence here, weak bullish divergence, and then there's a strong bullish divergence here, but this is all the bounce that I got. So the chart is still weak. 4 hours. I imagine 4 hour 8 is the guide. Yeah, so on the entry, shorter time frame entry, I would say 4 hour 8 is the guide. Maybe there is a daily bull divergence. No, there isn't. Yeah, it's gonna be hard to play. I don't, you know, if you look at this chart, let's see, very, very weak bullish divergence on the 4 hours. I would rather play the reversal confirmation on this chart. There is a lot of room to move upwards, but head and shoulders, wait for the bounce. If you're looking to play bearish, wait for the bounce first. Neckline. Yeah, wait for the bounce and then play bearish from there. If you're looking to play bullish, today is going to be key. Okay, that's DKNG heading for lower 25. Hey, you guys can see the comments on the new live format, right? I hope it works. 25, where's 25? Oh yeah, so if we lose this key zone, I would actually anticipate ultimately a hold of this lower part of the key zone where we saw multiple supports, previous rejection here and support, and slight loss of it, immediately bought up, and then another support around that 30 area. That would be the key to lose before we even start thinking about lower prices. 30 has to be lost, but that is a very, very strong support around there. Now after that, if it were to be lost, the only key price action I can see is 24.48. So 24.50 would be likely the next support under 30. So if you were to play bearish on DKNG, I would wait for the loss of 30, the key zone. There's a lot of strong support area around, what is this? 30.82. Okay. Snow. Oh, we got 30 minutes. Okay, so let's take a look at snow. Whew! What happened to it? Last time I looked at it, it was like somewhere back here. What a chart. Amazing move into that new all-time high, previous all-time high zone, and then straight shutdown. Hey, earnings is coming up December 1st, 1 week. GP is coming up, money line is coming up, everything's coming up. Bull's gonna want, okay, so there is a balance play in here, but I don't like how it's not too far extended. Oh, we didn't even cover Tesla yet. Yeah, I'll cover Tesla in a bit. Ooh, what a gap down. Yeah, so on snow, this is the area I'm looking at for the bulls to hold. Ultimately, the GP lining up with the money line. If this were to be, it could be lost in the sense that, you know, we can go like a wick and then the real body closing on or above the GP and the money line before a bounce into that daily 8, and then from there should see earnings. Yeah, so we should see earnings reaction, and that should determine where the chart's gonna go from here. But ultimately right now on the shorter term, this is the area I'm looking for the bulls to hold. I like the chart. It has good potential for new all-time high, just a matter of time. Market bearish. Okay, let's take a look at Tesla. Okay, Tesla. Ooh. Ooh, okay, yeah. I was scalping this yesterday. That's why there's so many lines, so many fibs, so many GPs and whatnot. So let's get rid of these. Yeah, this works. Okay. So yesterday, I was looking at the chart. It was a strong bounce. It was a strong bounce. We bounced all the way to the 0.786 before rejecting. But ultimately, if you look at the daily chart, we did not get past. We did not close over the GP. So essentially, this is a GP rejection. But based on the bounce, based on where we're working from, the chart is strong. So I was looking at this as a bounce play yesterday on the GP. Funny how perfectly sometimes these works out. So the low of yesterday was 1063. GP is 1063.99. What an amazing bounce, spot to bounce from. So scalped the bounce play here yesterday, just for some day maker lunch money kind of thing. It's nothing big deal. But from here we are opening up lower. Ultimately, yesterday they saved the candle, they saved the daily 8, but today we are gapping down open. There's potentially a bounce play again, but based on the market, based on the price action, based on if we were to look at the extended hours, look at this. We're still selling off right now, even as we speak. Okay, so would not be looking at the bounce play today. Likely won't be, just because we're not extended on the daily, we're not extended on any time frame yet. The 4 hours is only 52 RSI, 30 minutes is 46 without the extension on. So with this, I would anticipate lower prices come. Look at yesterday's volume. It is increasing bear volume way far outweighing the bull volumes from before. So this could be very well a ABC pattern that is looking a lot more and more likely to be an ABC pattern, at least to backtest this previous all-time high. And this actually makes sense because we saw multiple rejections. Okay, I thought we did. There's only one rejection here. Okay, this trend line's not that strong then. So there's multiple supports. Another support here, and then one rejection before a bull break. So there's only one rejection on this trend line, but ultimately it does line up with this previous all-time high zone. On Tesla, would be looking something like this. But would you want to play bearish on Tesla? Personally, I've had bad experience with that. You don't stand in front of a train. Ultimately, if you look at the chart on longer time frames, weekly, monthly, this is one of the strongest charts out there. Would not be considering playing bearish. If anything, would probably scalp bullish, or even just use this opportunity to buy shares, longer term data calls. Backtest would be an amazing opportunity around that previous 900 area on Tesla. Let snow be rich. That sounds funny. Getting rich on snow? What's be rich? Next one, we're gonna take GME. Very interesting chart. There's not a whole. Oh my goodness, they finally updated this. Jesus Christ. So there was such a good play on GME, and I keep kicking myself for not playing it just because this stupid ass thing that is earnings. It was showing us yesterday. Okay, it was showing the earnings yesterday, and I wanted to avoid that. I wanted to avoid the premium brim, avoid the IV crest, avoid whatever the hell it is. But so we were in common shares from down here, and ultimately, because the earnings were coming up and the chart wasn't moving too much, we sold on one of these 2 days, a little bit of profit. But oh my goodness, because of that earnings. So then ultimately it did a. Oh, that might be what happened. It could this could be like a because a lot of people got tricked on the earnings. Both TradingView as well as investing.com were showing yesterday as earnings, and this could be the run up into earnings, and then when it's confirmed the earnings is not yesterday, they sold it right away. Wow. Chart ultimately, I still like it as long as this GP holds. Okay, as long as the GP holds. Yesterday, obviously not a good candle. No buyers whatsoever. Volume was not even that big, but huge huge bearish price action. Keeping it on top watch, however, whether it's for bounce play or whatever the hell it is, but I still like GME. For a longer term, there is good opportunity for huge bounces, huge moves. All right, so we'll take a look at Amazon, but the next one I want to take a look at first is RK. FNGU, RK. Let's discuss those two, because as a newest member Darren asked about, come on, what's going on? Okay, there we go. My keyboard might be dying. FNGU, is there opportunity? Ooh, bearish pressure continues. Okay, FNGU, is there opportunity in here? Well, look at the pre-market open. Gap down open. We need this to hold. So if there is a easy stop play on FNGU, this is the previous all-time high back test. You know, back test, go and a back test. But this could be ABC as well. When we look at this, yesterday's low of day is a must hold, where you can see. Okay, let's draw this a little bit lower. Okay, yeah, I think my keyboard is dying. Oh, come on. Nope, not working. Maybe it's over here. Okay, yeah, that works a little bit better. There. The high of the day. Rejection over here as well. So, lost immediate bounce rejection. And then another rejection here. That works a lot better. And then the support here yesterday. So this 41.76 is a must hold for the bulls. Easy stop play. But looking at the volume, it's not something I'll be playing bullish as of right now. So if you're not thinking of playing bullish, but instead you're looking at bearish play on FNGU, the reverse of this is FNGD. FNGD. Yeah. 3 times leverage bear. Inverse chart of FNGU. You know, just something to consider if you're looking to play bearish. But ultimately, it's not a chart I'll be touching right now. Apple is still remaining one of the strongest names. Amazon is really trying to hold that 88. We are gapping down below it, but there is lots of strong supports around the area. So Amazon, what's the other one? Tesla is looking bearish. So the underlying assets on FNGU right now, on the shorter time frame, is looking bearish. On the longer time frame, I do still think there is a lot of upside to come, because we are in the blue sky. This is the previous all-time high backtest. It might end up being Rust, sort of like Rust, where we backtest a little bit more. GP, this was a big run. Okay, so there's a lot of room to move. We are still trading above the 0.5. Are we at 0.3? Yeah, so we held the 0.3 yesterday. You're gonna have to see whether we lose it today. But GP is way far down here. And, you know, if you're looking at first entry, this could actually be a very decent area for first entry. Lots of previous rejections, the lower part of the key zone. Another rejection back here. 37 to 37.6 would be the area I'm looking for on FNGU. And the other one is, what did I say? RK. Okay, interesting chart. We are extended on the daily on RK. We lost all sorts of support. Lost GP, just blasted straight through it, making new lows. And we're now looking at potential backtest of this previous trend line, depending on how you draw it. We could have been backtesting it already. Let's see if this works. Yeah, this works. I actually like this better. Again, draw from where the reason we're not using this one is it's a big red candle, right? So draw from where the highest closest or the highest wick of the green candles, and it works is because we see a rejection here, multiple rejections here, and a rejection here before breaking over, and immediate back test, but coming back down, losing it again. So this trend line works. I like it, and if based on, I like this trend line a lot better than what we had before. based on that, we are losing the trend line. So a little bit of a concern. And this money line where we saw bounce from, a strong bounce, and another weak bounce, breaking down under, back tested. This could see much further downside. We did lose that support of 106 as well. 97 is a must hold. Once this 97 is lost, we see previous resistance here and support, multiple supports here. Once this 97 is lost, we'll be looking down 92-ish. Hey, my keyboard is working again. $91. Yeah. Okay, so that's RK. Let's take a look at market. Oh, my two dedicated morning live viewers. Hey, I got a question for you guys. How do you guys feel about Monday morning lives? The reason why I'm asking is just because Mondays, when I used to work full-time, I really liked waking up early on Mondays to watch morning live or whatever, just get a sense of what could potentially happen in the market for the week. So how do you guys feel about that? And to answer your question there, and on our trading group, your question was anticipating Santa Claus rally. Yes. How do I put this? So one thing to always remember is when the majority of the market, majority of traders, majority of investors are expecting something, market tends to slap you across the face. Okay, same as back here, majority of market was anticipating what did they say, like 47, 48, 4,800, 5K kind of thing on SPX. Yeah, it slapped them across the face, right? And then I can't remember what the market was anticipating here, but yeah, so the market was anticipating a new run, a new all-time high run, straight into Santa Claus rally, straight into 48, 5K kind of thing, but it is slapping them across the face again. So it's very good to understand what the market is anticipating, in the sense that you want to be cautious, especially when majority of the people are talking about rallies. Majority of people are talking about bearish. You want to stay, I guess the main thing is just try to stay ahead of the trend, ahead of the topic, the hot topic, whatever it is. But a lot of people, to my understanding, a lot of people were talking about Santa Claus rally, and there is still a chance of it. And in my opinion, today is very key. I guess every day is key, but I want to see the action today. Today is very key because we're gonna need to see whether it will break over 4,700 or break down under 4,653. Either one, if we're to break down under 4,653, we will get a very clear bearish direction. If we're to break over 4,700, this does show bearish, no follow through, immediate buyout above 4,700. We should be looking new higher prices to come. So with that, if we're to break over 4,700, then the Santa Claus, in my opinion, Santa Claus rally is on. But we're gonna need to see these two, yesterday's high and low, key to break. Oh, bearish, that's what you're talking about. Snow bearish. Yeah, makes sense. It is a head and shoulders. No, it's not. Sorry. We are a little bit extended on the daily already, and huge bear volume. Indecision candle yesterday. So as for the bearish play, you're a little bit late. I would, as mentioned here, I will wait for the bounce before playing bearish. Or the other way to do this is wait for the loss of this money line. Ultimately, the first bearish play was on the loss of this upper trend line because we saw a bull break overthrow coming back down immediate. This was the day to enter on the bearish play. So that's why I mean, right now you're a little bit late. Two ways to play this: wait for the bounce that daily lower high before entering, or the easier play is upon the confirmation, the loss of this lower trend line. Just my personal preference. It's a lot easier to make money that way, playing with the trend. Ultimately, if you look on the daily right now, it's still just a daily higher low. So on the bounce, lower high, that gives you potential of reversing that daily trend. So if you were to play bearish right now, ultimately you're going against the daily trend. Next slide. This is what I mean. I don't like drawing a shorter time frame wedges or patterns. It makes the chart harder to look at. So today is looking like there's potential for inside bar. No price action, just staying within yesterday's price action. It's looking like that potential. A lot of gapping downs. Airbnb looks a little bit interesting. Yeah, nothing is too interesting. Lucid, been a while since we talked about it. Lucid, hey, make sure to keep it on your top watch. Okay. Whoa, that's a lot of lines. Pre-market price, support again. Look at this chart. Whew, what a strong ass chart. Look at this. Okay, so let's zoom in here a little bit. Somewhat of a daily bull flag, slightly lost it, confirmed daily bull flag, and then another daily bull flag here, confirmed another daily bull flag here, and we are now forming another daily bull flag without a loss of daily 8. Strong chart. One of those charts that you do not want to lose sight. This on the next confirmation, we'll be looking at the new previous all-time high zone. Lucid, one of the how do I put this? One of the very few bullish charts out there. So keep it on your top watch. It's somewhat like Tesla. It's got almost a permanent spot on my top 16 charts now, which is all daily, by the way. So yeah, daily bull flag, looking amazing. Decreasing volume, classic bull flag formation, same as back here, okay? Now we're just gonna be waiting for that volume pop into confirmation. Watch for the volume early on in the day. I'm not saying today, it might be today, but I like the chart. Lucid, keep it on your top watch. Okay. So my personal top watch today would be DKNG for a potential bounce play. Oh, I just got us. Where'd it go? Okay, I think my keyboard literally just died now. Come on. Hey, there we go. Weird. Probably have to change the battery after the video. Yeah, so DKNG for the bounce play. They're looking at the 1-to-1 extension target 34.26. Watching for a reaction today. And not a whole lot, to be honest. Airbnb probably. I actually haven't talked about it yet. So Airbnb, the reason why I'm watching it, potentially watching a top watch today, is this lower trend line. You know, we are right on it yesterday. And not to mention, if we're to look at this linear regression, we are right at the lower trend line of the linear regression as well. I mean, okay, so they tried to curl the linear regression upwards by this overthrow. This is why I was telling you guys about going over that upper trend line. This would generally curl the linear regression higher. But now this is a daily bear divergence coming back down. Gap filled. Oh. Lots of room to move. We're right at that previous resistance, where we also saw multiple supports from back here. Probably draw this one lower. Yeah, that works better. At least for the most recent price action. Yeah, so if we're to lose this key support right here right now, the 177, we'll be looking down at the key zone. But ultimately is one of the higher potential for bounce charts out there. DKNG, Airbnb, market is still bearish. MTTR. Whoa. Hey, there's a potential bearish play in here, but you'll be going against new all-time high zone. Actually, yeah, I quite like it. There's a potential bearish play on here. Daily, look at the volume, huge bearish volume. Yesterday is not so great though. Huge bearish engulfing, and I talked about this in. I'm pretty sure I talked about this in our trading chat group. Oh, sorry. Can't see the comments anymore. Yeah, so yeah, pretty sure I talked about this huge bearish engulfing candlestick, and yesterday we saw follow through, but the volume is not exactly there. There is no daily bearish divergence either. So there is a bear play here, at least for the back test of this previous all-time high. But would you do it? You know, that's the question you got to ask yourself, especially if you're looking at this. You know, majority of the charts out there are gapping down, but this chart is actually gapping up. I would probably wait for that daily bear divergence on the new high for the bear play. But hey, very interesting chart. All right, so we're going to keep it at that today. Hey, quick reminder, 250 subs, guys. Come on, let's get to it. 250 subs. We are going to have a contest for some giveaways. Our first giveaways ever. I am very excited for it. Again, thank you guys for watching. Thank you guys for joining us on our morning live. I will see you in the next video.